Did you know that companies like Johnson & Johnson and Procter & Gamble have been paying and increasing their dividends for decades? Well, what if I told you that you could leverage these dividends to earn $4,500 a month by the end of this year? Join us as we examine the powerful world of dividend investing inspired by Warren Buffett's principles and reveal strategies that can help you achieve this goal. The world of dividends. All right, let's start with the basics. What exactly are dividends? Well, simply put, dividends are payments a company makes to its shareholders, usually drawn from its profits. Think of it as a reward for investing in the company. These payments can be made in cash or additional shares of stock. Dividends are a great way to earn a steady income from your investments, and they can be a sign of a company's financial health. Companies that pay dividends are often well established and financially stable. In fact, many of Berkshire Hathaway's top holdings are dividend-paying stocks. But why does Buffett favor these types of investments? Dividend stocks offer consistent cash flow and regular income, which is especially appealing during market downturns. When dividends are reinvested, they harness the power of compounding, significantly boosting total returns over time. Additionally, companies that consistently pay and increase dividends often demonstrate strong financial health and stable business models. Many of these companies also increase their payouts over time, offering protection against inflation. Why do companies pay dividends? There are several reasons why companies pay dividends, and the reasons often depend on the company's stage of growth and financial strategy. One reason is to share profits with shareholders. This is common among mature companies with stable earnings. For example, Microsoft has been paying dividends since 2003 and has consistently increased its dividend payments. In 2023, Microsoft paid an annual dividend of $2.72 per share. Another reason is to attract and retain investors. Dividends can make a company's stock more attractive, especially to income-focused investors. This increased demand can drive up the stock price. For instance, companies like ExxonMobil and Verizon are known for their attractive dividend yields, which help maintain a loyal investor base. Dividends also signal financial strength. A company that consistently pays and increases dividends is often seen as financially healthy. This can boost investor confidence and support the stock price. For example, Procter & Gamble has increased its dividends for 67 consecutive years, showcasing its financial stability. We'd love to hear from you. What's your favorite dividend stock and why? Share your thoughts in the comments below. Now let's look into some advanced strategies and practical steps to help you earn $4,500 a month in dividend income. Ready to take your dividend investing to the next level? Let's go. Understanding the past performance of dividend stocks can give us valuable insights into their potential future performance. Let's start with the S&P 500, a benchmark of the overall stock market. Historically, the S&P 500 has had an average dividend yield of around 2% to 3%. During the 2008 financial crisis, the yield spiked to over 3.5% as stock prices fell, but it has since stabilized around 2%. This shows how dividend yields can fluctuate with market conditions. Create a monthly dividend portfolio. Investing in stocks that pay dividends is a smart move, but there's one problem. Most of these stocks only pay out every 3 months. That can feel like a long wait if you rely on money for regular expenses. But what if there was a way to get around this? By creating a portfolio of carefully selected stocks, you can ensure you get paid every month. To achieve a steady monthly income, it's essential to have a perfect portfolio of 12 stocks that pay quarterly dividends and on dates that do not coincide with other stocks. Also, make sure these are high yield and borderline safe stocks in which to invest. It sounds like huge research, but we've made it easier with a selection of 12 stocks that fit perfectly for cash flow every week. First, we'll take a look at these 12 stocks and see why these stocks make sense in this portfolio and then demonstrate how this portfolio pays every week of the month. Number 1, Saratoga Investment Corporation, SAR, with a current dividend yield of 11.2% is a specialty finance company that provides customized financing solutions to middle market businesses. This inclusion capitalizes on its ability to generate substantial income through interest payments and a disciplined investment approach. Number 2, Arbor Realty Trust Incorporated. Arbor Realty Trust, ABR, specializes in multifamily and commercial real estate loans. This stock offers a healthy dividend yield of 14.09%. Arbor's focus on high-yield, short-duration loans makes it an attractive choice for generating consistent high income, aligning well with the portfolio's goal of achieving weekly cash flow. Number 3, Euronav NV, EURN, stands out with a substantial 17.72% dividend yield. This company is one of the largest independent tanker companies globally, specializing in transporting and storing crude oil. EURN's inclusion is based on its strong fleet operations, global presence, and solid market position, which enable a stable and high income generation. Number 4, Van Eck BDC Income ETF, BIZD, offers a dividend yield of 10.82%. BIZD provides exposure to a portfolio of business development companies that finance small and mid-sized businesses, a sector often overlooked by traditional banks. BIZD's role is to tap into the potential of this niche market, offering both income and growth opportunities. Number 5, Van Eck Mortgage REIT Income ETF, MORT, boasts a 13.56% dividend yield. MORT provides exposure to the mortgage finance sector, which can offer attractive returns during periods of stable or declining interest rates. This choice adds diversification in financial instruments to the portfolio. Number 6, Natural Health Trends Corporation, NHTC, with a dividend yield of 15.8%, operates a global direct selling and e-commerce platform offering personal care and wellness products. Its high yield reflects NHTC's aggressive growth strategy and successful expansion in international markets. Its inclusion offers a balance between high yield and exposure to the rapidly growing e-commerce sector. Number 7, CTO Realty Growth Incorporated. CTO acquires and manages a diverse retail of office properties portfolio. Its yield of 9.1% is attractive, particularly given the recovering retail sector post-pandemic. Adding the CTO to this portfolio can increase consumer spending potential and bring in more diverse assets and geographical diversity. Number 8, Armada Hoffler Properties Incorporated. AHH is a real estate investment trust focusing on developing, building, and managing commercial and residential properties. With a dividend yield of 7.29%, it sits below the average of real estate investment trusts, reflecting its stable but cautious dividend policy. This stock contributes to the portfolio by combining growth and income. It's suitable for conservative investors looking for consistent returns. Number 9, Altria Group Incorporated, MO, a leader in the tobacco industry, offers a 9.54% dividend yield. This high yield reflects the company's strong cash flow and commitment to shareholder returns despite challenges in the tobacco industry. MO's role in the portfolio is to provide robust dividend income backed by a long history of financial stability. Number 10, Delek Logistics Partners LP, DKL, operates in the energy sector and deals with the movement and storage of oil and oil products. Its dividend yield of 8.49% makes it a smart pick because it deals with a crucial, always in demand part of the energy business. This focus on a key part of the energy business makes DKL less affected by the ups and downs that oil companies often face. Adding DKL to the portfolio provides a stable source of income from a vital industry sector. Number 11, Medifast Incorporated, MED, is an interesting contrast in the health and wellness sector. It offers weight management and nutrition products. Its 9.89% yield is impressive, supported by strong consumer demand and effective business strategies. Medifast's inclusion diversifies the portfolio into the growing wellness industry. Number 12, Physicians Realty Trust. DOC offers a dividend yield of 6.91%, which is slightly higher than the average in its sector. It focuses on healthcare properties, a sector known for stability and long-term growth potential, making DOC a prudent choice for risk-averse investors. This edition strategically balances high-yield risks with sector stability. Each of these stocks contributes uniquely to the portfolio, offering a blend of high yield, sector diversity, and strategic positioning for income and growth. The key to achieving steady cash flow is in their payment periods. All these stocks pay quarterly dividends, and most have a different payment method from the next one. Using this portfolio can ensure at least 4 dividend-paying stocks each month, one for each week, ensuring steady cash flow. Check out this example portfolio, okay? So let's say John invests $10,000 in each stock, bringing his total investment to $120,000. This initial investment has a double purpose. It provides a substantial base for generating dividends and capital appreciation. Starting our timeline with January, which is not the most attractive month for dividends, a few stocks that pay dividends at the very end of the year carry forward to January. In this portfolio, these stocks are BIZD, MOAHH, and DOC, which will have the first quarterly dividend payment in January. In February, 4 different stocks pay their quarterly dividends: EURN, DKL, NHTC, and CTO. Then, 4 other stocks pay quarterly dividends in March. This pattern continues, ensuring that at least 4 stocks pay each quarter, providing dividend cash flows every week of the month. Knowing the quarterly paying stocks, we can now calculate the dividend income John would receive from each. The total dividend income is the sum of the individual dividends divided by 12, since we have 12 stocks, and then divided by 4, since each stock pays 4 times a year. So here's a rough calculation using a mean dividend yield. Consider an average dividend yield of 10% across the 12 stocks. On an initial $120,000 investment, John could expect annual dividend income 10% of $120,000 equals $12,000. Monthly dividend income $12,000 divided by 12 equals $1,000. Weekly dividend income $1,000 divided by 4 is $250. Now, building a dividend portfolio that generates $4,500 monthly takes time and practice. There's likely going to be market ups and downs along the way, so you got to stay focused on your long-term goals and avoid making emotional decisions based on short-term market movements. Dividends can be taxed differently depending on whether they're qualified or non-qualified, and your overall tax situation. When appropriate, consider holding dividend-paying stocks in tax-advantaged accounts like IRAs and consulting with a tax professional for personalized advice. The world of investing is always evolving. Stay informed about market trends, company news, and economic developments. Read books on dividend investing, follow trusted financial news sources, and join investor communities to share ideas and learn from others. Earning a $4,500 monthly dividend income is a challenging but attainable goal with the right strategies, practice, and consistent effort. Following successful investors like Warren Buffett, you can focus on quality dividend-paying stocks to build a portfolio that generates substantial passive income. Creating a portfolio of dividend-paying stocks requires careful selection to ensure steady cash flow. The stocks mentioned are examples of high-yield stocks that diversify across sectors, providing both steady income and potential growth. By investing wisely, you can create a portfolio that pays dividends every month. Remember, the journey to financial freedom through dividend investing is a marathon, not a sprint. Start where you are, stay consistent, and keep learning along the way. With time and dedication, you could be well on your way to living off dividends in 2024 and beyond. For more understanding on investing in high-yield stocks and earning from dividends, why don't you learn from the master himself?